For the first time since 2020, we have the perfect storm of events all taking place at the exact same time, causing some of the largest single-day losses since COVID.
Overnight, Japan's Nikkei plunged 12%. That is its worst day since 1987.
The Dow's down more than 1,000 points as that global sell-off intensifies.
Seems like a recession cannot be ruled out just yet. Is America heading towards a recession?
Japanese yen unwinding. Look, even though this sounds like a complicated term, it's really easy to understand if we break it down. On the surface, global economies are extremely interconnected. Like what happens in the UK has the potential to impact the United States. China's decisions have a large effect on the demand of US dollars. And when one country is economically stronger than another, money tends to flow out and into something else, which is what's happening here. Even though our money has lost a significant amount of its purchasing power over the last 50 years, it's still the reserve currency in the world. And that means there's consistent demand for something like this. And no, I don't mean a $2 bill. I just keep this on me because it's good luck. Instead, I mean demand for US treasuries. Think of it like this. Every country has their own unique currency, interest rate, and inflation rate, which is constantly measured by what it gets you in US dollars. This means there can be arbitrage opportunities where you borrow in one currency at a low interest rate, put that in another currency at a higher interest rate, and then you profit the difference, which is what's happening with Japan. For more than 30 years, the Japanese yen has been on a downtrend. In fact, their financial system is so bad, with decades of deflation, an aging population, and weak demand, that interest rates remain near historic lows just to incentivize spending, borrowing, and trade. And they could get away with that because until recently, inflation for them has been non-existent. Now, in most cases, this isn't that big of a deal, and global interest rates tend to balance each other out. But recently, something changed. Because the United States battled with record high inflation from 2022 to 23, they were forced to raise interest rates at the fastest pace ever in history. And all of a sudden, the United States was paying a very competitive interest rate that was completely risk-free. This presented a very unique opportunity where traders could borrow the yen at a low interest rate, put that in US dollars and treasuries at a high interest rate, and then profit the difference. On top of that, historically, the yen has also gone down in value relative to US dollars, which means that by the time you actually have to pay off your loan, it'll require fewer US dollars to be able to pay it back. So you could also make a profit on top of that by paying back less than you borrowed. As an example of this, in really simple terms, imagine you borrowed 1.3 million yen at 0.5% interest, which would get you 10,000 US dollars. You could then take that $10,000 and buy a 12-month treasury that earns 5.5%. If everything stays the exact same, after 12 months, you now have $10,550, which is equivalent to 1,371,000 yen. You pay back the 1.3 million plus interest, and now you have roughly 500 US dollars worth of profit, all while investing in something that's backed by the full faith of the US government. However, like I mentioned earlier, there is one factor that could either be the biggest blessing or curse when it comes to this, and that would be currency exchange. In our previous example, investors got very accustomed to being able to borrow 1.3 million worth of yen, get 10,000 US dollars, and 12 months later when they cash out, the yen weakened, and all of a sudden, the $10,000 now gets you 1.5 million yen. This means not only would you be able to make $500 worth of profit, but you also make an extra 200,000 yen for free